Ladies and gentlemen, good day and welcome to Integrated Industries Limited Q3 and 9-month FY'25 earnings conference call hosted by Adfactors PR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Saurabh Goyal, Managing Director at Integrated Industries Limited. Thank you, and over to you, sir.
Yeah. Good morning, everyone. I welcome all the investors to the Q3 earnings calls of Messrs. Integrated Industries Limited. I've been joined by our VP Finance. Firstly, I will give a brief about the company. Integrated Industries Limited is presently engaged in business of organic and inorganic food products, bakery products, and other processed food items. In 2023, the company acquired a successfully running biscuit manufacturing plant with a capacity of 3,400 metric tons per annum at Neemrana, Rajasthan, in its subsidiary Nurturewell Foods Limited, which manufactures biscuits and cookies under the brand name of Richlight and Fun Treat at the state-of-the-art production facilities in Neemrana. Richlight biscuits and cookies are available at all major retail outlets in the neighborhood across North India. The distribution network of Richfield is supported by a large number of super stockists and distributors. We have a strong network of 150 plus business partners. Through them, we distribute our products in the complete North Indian market covering Jammu and Kashmir, Himachal, Punjab, Rajasthan, Uttarakhand, Delhi NCR, and Uttar Pradesh. Along with the domestic market, our products are extremely acceptable in the overseas markets such as UAE, Somalia, Tanzania, Kuwait, Afghanistan, Congo, Kenya, and Seychelles. The company also has expanded its global presence by establishing Messrs. Nurturewell LLC in Dubai, which is engaged in the business of bakery items on a contract manufacturing basis. We have recently developed a range of healthier biscuit options, including low sugar, high fiber, and gluten-free variants to cater to the growing health-conscious segment. We are proposing to introduce regional flavors and ingredients to appeal the diverse Indian taste, leveraging local preferences for flavors like cardamom, saffron, and jaggery. We are focusing on premium and value-added products such as cookies with added vitamins, minerals, or functional ingredients like probiotics. We shall expand into the international markets, particularly targeting Indian communities in countries with high demand for Indian food products. We are strengthening networks in rural and semi-urban areas where biscuit consumption is growing rapidly. We shall focus on sustainability by adopting eco-friendly packaging solutions and reducing the carbon footprints of manufacturing processes. Thank you everyone for joining the conference call. You can ask the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. First question is from Swapnil Kabra from SK Enterprises. Please go ahead.
Hi, sir. Firstly, congratulations for a great set of numbers. Sir, I just wanted to understand what is driving the demand for us, and can we continue this growth momentum going ahead in FY'26?
Yeah, the growth momentum will continue into 26 because we are setting up a new biscuit manufacturing facility which will be manufacturing cookies, confectionery items. So the growth momentum will increase only going forward from here.
All right, sir.
Yeah.
And sir, what are we doing differently?
We are expanding our distribution network also, and we are coming up with a new product range from time to time. So the growth of around 35-40% year-on-year will be there for the coming period.
All right. Sir, can you also throw some light on our manufacturing capabilities and what is the maximum revenue that we can do with the current setup?
So with the current setup, our production facility that we have in Nimrana, that capacity is at 3,400 tons. And then another facility we are making in Secunderabad, UP, that will start the commercial production by 2026, end of 2026. After that production line is after that plant is commenced production, the capacity of that plant will be around 5,000 tons. So, and plus we have a lot of contract manufacturing where we get products developed from our vendors and we market it under our brand name.
All right, sir. So, sir, are we confident enough to maintain the margins at current levels?
Yeah. Going forward, the margins will be in line only, and we will be maintaining the margins.
All right, sir. Thank you so much. I'll join you again.
Thank you.
Thank you. The next question is from Prabal Jain from SM Holdings. Please go ahead.
Mm-hmm.
Yeah, hi. So,
Hello.
first question I wanted to understand is, what is your sales geographical mix? Like, I understand you're exporting and you have some domestic consumption also. Can you provide me a mix?
Pardon? What do you want to
Yeah.
know?
So basically, what I want to understand is how much of your sales is coming from India, how much is coming from Middle East, how much is coming from Africa?
Yeah. So currently, if you talk about the biscuit sales, around 75% is domestic, which is mainly into northern India, and 25% of our sales are coming from export businesses, mainly into Dubai and the African region. And recently, we have got orders from the South American market also. So, and export market is, we are very robust on the export market as our US has put tariffs on biscuits from China. So the export market looks very lucrative for the coming period.
Okay, great. Can I also understand, like, what is your cash collection cycle? Because in the domestic business, I think it would be less, but in export, like, how are you doing it?
Yeah. So the cash collection in domestic, it is from the average period is around 15 days. And in export, we do it on FOB basis. So in export, the payment cycle is maximum, you would say, for around 45 days.
Okay. So, from what I understand...
Depending on region, yeah.
Okay.
Depending on country to country, yeah.
Okay. So for this FY'25, since you have cumulatively done, I think 500, 550 types revenue till now, so is it safe to assume that you must have collected a lot of cash by now, at least from the domestic segment?
Yeah.
So the realization, the capital,
I just added to this that the realizations has been well within the credit period that we are offering. So there are no overdues or, there are no debtors which are beyond 90 days in the company. So we have been able to realize the debtors and are keeping the debtors at a very low level, because the credit period that we are offering is also not much higher. Let's say 15 days in case of domestic and 30-35 days in case of export. So all the realizations are coming in time.
So is it safe to assume on my part that FY'25 till now?
It is safe as well as it is actual fact that the realizations are on time, sir.
Okay, great. Another thing I wanted to understand is what capacity utilization are you operating out of this one existing plant, Nimrana, 3,400 metric ton?
You can add, sir.
Sorry?
Saurabh, sir, you are there?
Yeah, I'm there. Yeah. Yeah. So we are currently running at 75% capacity utilization.
Okay. Okay.
Hmm.
Okay, great. Okay, just a minute. Yeah. Also, just wanted to understand, like, your plan going ahead, like, do you have any specific revenue guidance for the next few years or FY'26 specifically, or any vision you are targeting for the next 4 or 5 years?
See, this year, on a consolidated basis, if you see, our revenue has increased manifold, and going forward with the new unit coming into operation in 2026, with 6 months of operations. So we are expecting our revenue to grow up by at least 50% in FY'26, and with the full 12 months of operation in 27, so we are expecting close to 70 to 75% growth in the sales.
Got it. 70 to 75% in FY'27 on FY'26 base.
Yeah.
Okay. Okay. Now, next, what I wanted to understand is more along the stake sale that you have done to, I think, India Inflection Opportunities Fund.
Yes.
So can you throw some light on that? Is it because of, is it for expansion, or is it strategic stake sale, or what?
See, there are two things which need to be considered here, is that our company is a debt-free company. We don't have any debt in our company. Second is that we need regular working capitals to pump in to manage the operations and to meet the working capital requirements, wherein we are required to maintain the adequate stocks, as well as, you know, the time period involved in the realization from the debtors. So the funds which we have raised, we have pumped into the company to boost the sales as well as to meet the working capital requirement.
Okay. And okay. Makes sense. Okay. Any more equity dilution plan going ahead? FY'26 CapEx, how are you funding it?
That we are considering an expansion for new unit, and the workings are under process as of now, which I can tell you. We are preparing the detailed project report in terms of what are the capex required and how much revenues and, you know, markets to explore. So all those things are under process. So once that is finalized, we will definitely make an announcement as to how the capex is going to be funded.
Okay. So, I mean, we are deciding whether to fund it by equity, debt, or a mix, right?
Yeah, that is under consideration.
So right now we have the land, or land acquisition is also pending?
So land we have already identified in Secunderabad, as our MD said. The land is already been identified, and some formal agreements to sell kind of a thing has been done. So depending on the capex capacities at that 5,000 capacities and, you know, the kind of lines that we require in the plant. So once that is finalized, then we will have a picture to discuss or to disclose with you investors in next quarter, I guess.
Okay. No issues. Another thing is not exactly a question, but something along this, like, I understand you mentioned you got some new orders from South American market also, you mentioned, right? And so I was just wondering if, you know, you could just keep us minority shareholders also updated via proper timely disclosures. Just simple press release and a quarterly con call every quarter, if you could do, that would be very helpful, you know.
Yeah. This we have started, and it will be continuing in future as well. Don't worry about it. We will be keeping you all updated.
Okay, great. So for now I'm done, but I'll get back in the queue if I get more questions. Yeah, thanks.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from CA Garvit Goyal from Envis Analytics Advisory. Please go ahead.
Hi, am I audible?
Yeah, you're audible. Please go ahead.
Good morning, sir. Congrats for a decent set of numbers. Can you please give a brief overview on the company history and how the company underwent transformation after being acquired by new promoters? What is your vision with this company going ahead? What has been your own history and experience with the kind of industry that we have entered into and planning to grow? And what are our future growth plans as well? So kindly spend a few minutes on it for better clarity, sir.
Mm-hmm. Yeah. So we acquired this company in April 2023, and in this company, through its subsidiary, we acquired this biscuit manufacturing plant in Concall Foods, which was a running biscuit manufacturing plant. And if you see at the numbers in 24 itself, the company was profitable. And the best part about the company is that the company is debt-free. There is zero debt. And we have got very aggressive expansion plans in the company. And for that, we are setting up new manufacturing facilities also. And we are doing a lot of contract manufacturing also from different countries and selling them in the international market. And as you know that food industry, FMCG market is growing at the rate of around 15 to 20% year on year. So the demand cycle is always there, and we are making more value added. We are trying to make more value added products such as cookies, and we will be entering into the confectionery business also, which are wafer cones, chocolates. So and in the export market, we are putting up lines for Danish butter cookies. So that basket is all value added basket in which the margins are very high. So yeah, we've got a very aggressive growth plan for the company.
And you mentioned new manufacturing facilities. So will these manufacturing facilities be in Rajasthan only? And what kind of expansion will it be there over and above our existing manufacturing capacity? Like you mentioned, I think 3,400 MP, right?
Yeah. Currently our plant capacity is 3,400 tons. So the new facility that we are coming up with, that is in UP, Uttar Pradesh. And there we have a plan of setting up a production facility of around close to 5,000 tons.
2 to 5,000 tons.
5,000.
5,000 tons. That's ultimately, obviously, you are more than doubling your existing capacity, right?
Yeah.
And
in that we will be making in that facility we will be bringing in new product lines, new products.
That will be value-added products.
Yeah, value-added products.
That's good. And so, in existing facility, what is our utilization level right now?
So utilization levels right now is close to 75%.
So it is almost at optimum utilization, right?
Yeah, you can say that.
What will be the maximum level of utilization in this capacity?
Maximum we can go up to 90-95%.
95%.
But we are doing, but what we are doing is that we are getting a lot of contract manufacturing also done. So manufacturing is not a problem. So the main challenge is the distribution network, which we have a very strong distribution network. So we will be developing products from contract manufacturing and putting it into our distribution. And once the facility is running in the new plant, we can do the manufacturing in-house.
And the new facility, the setup is yet started, or we are just planning? We are at just planning stage, and we have
No. We are at advanced stages.
So from where we are going to raise the funds, like on balance sheet, I think we are having 6 CR cash equivalent only. So is it going to be financed by debt, or are we looking for equity fundraise for the dilution of the equity?
That we have to decide. So whatever will be the best, we will be doing that through. It will be mix of everything, internal accruals and debt and equity. We have so once the detailed project report and everything is in place, we will have a clearer picture of what we have to do going ahead.
And by when do we expect the capacity to come online for production?
So, you can start seeing, end of 26 or you can say 27, 28. The numbers will start reflecting in the balance sheet.
The capacity will start by the end of FY'26, right?
Yeah.
And it will start contributing to revenue in FY'27.
Yeah. Yes.
Got it. And our existing distribution network is 150 plus you mentioned. So, do we have any further plans to expand on it?
Yeah. We are expanding our distribution network also. So we are currently operating in Northern India only. So we are planning to start our distribution in eastern and western part also. So that will add to more distributors.
Understood. And can you give a number to where do you see our top line in FY'25 and where do you see our top line in FY'26 as well, like in the absolute number term?
Yeah. Please, Vikas, you can give the numbers.
Just 1 minute. I am not able to hear. Yeah, can you repeat the question because I did not hear it?
I'm saying, where do you see our top line in FY'25 and where do you see our top line in FY'26?
See, FY'25 will be close to 700. We'll be closing it. And going forward in FY'26, we are planning, we are well on course to touch 1,000 crore figure in terms of top line.
Thank you. Mr. Goyal, we request you to rejoin the queue.
Yeah.
The next question is from Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. So, sir, out of this 526 crore of sales, the entire sales is for biscuits or, some other element also? If you can also give the breakup between exports and domestic market in this 526 crore sales.
See, yes, the entire sales is for...
Can I take up? Yeah. So, see, out of this 525 crore of turnover, approximate 400, the entire sale is for the bakery items only. And if you talk about exclusive biscuits, around 425 crore, which is almost 80-85% is from the biscuit segments.
And what will be the breakup between exports and domestic?
The exports in terms of, the revenue from the domestic company, Natural Foods, that approximate 20 to 22 crore of the turnover will be exports. And whereas the contribution from our Dubai business is entirely exports, that you can say. So majorly you can say that.
If you can talk about it.
Yeah, it is a kind of a contract manufacturing of bakery items, biscuits mainly, and we get it manufactured on contract basis based on the orders in hand. So the similar lines on which we do the business in India only. So
Dubai will be how much? So 25 crore is direct exports, and how much?
Yeah, direct export to our direct customers, and whereas Dubai company, the overseas operations, they contribute close to 350 crore of turnover.
350 crore of turnover. So we have reached almost, we are planning to reach almost 700 crore of revenue in such a short time. I think biscuit manufacturing and selling is not that easy, business. You have established players like Britannia and all in this market. So how have we been able to scale up these revenues in such a short period of time? How have we been able to establish our brand and do contract manufacturing, establish brand in local market and, establish contract manufacturing in exports? If you can talk about it, the business model and how, what is the reason for our success, if you can talk about that.
See, as already told by the MD sir also that, we have a strong distributorship network of around 150 in India. And similarly, we have the same distribution network in overseas also. So that's why the penetration is, generated to these distributors to overseas market as well. And some of them are the counterparts of our Indian distributors, so who are, managing the operations there. So, obtaining the orders or, developing the customer base is not that difficult for us to expand into, different geographical entries and, expand our sales figures. So that has been the plus point or there is a strong point with us is that we have a strong distribution network wherein, we are generating a lot of orders, not only from our Indian company as well as for the Dubai company as well. So that has been the key strength.
Sure. How have we been able to establish, 150 distributors in domestic market and, so many distributors in exports in such a short period of, taking over this company of, let's say, around 1.5 years back. So, in such a short period of time, we have been able to scale up so well.
So I'll give you a brief about the company. So the company we acquired, that was into operation since 2014. It was already a very established brand in the export and the domestic market. So we have a huge sales team of around 75-80 people across North India and in the export market.
How much did we pay to acquire this brand and plant?
75 crores.
Yeah, because
75 crores.
Okay. And when we acquired it, how much was the turnover of the company?
They were operating at approximate, I think, 70-80 crores.
70. So from 70-80 crores, we have scaled to almost 7-10 times in let's say in a span of 1.5 crores.
So there was some issues in the management of the earlier company. That's why they sold the plant to us.
Okay.
They were not able to manage it. Yeah.
Okay. But I'm still not able to figure out how we've been able to grow this business in such a short period of time. It's commendable that we have done so well. If you can, briefly talk about exports, how we've been able to establish distributors and geographical breakup, for the Dubai subsidiary which does 350 crores. So to whom do they sell, and if you can talk about that.
Because?
Yeah. You have any question or you just said anything?
No, I'm just asking, to whom does this US Dubai subsidiary sell? If you can talk about it.
Can you explain again? Because I'm not able, because the voice is very slow.
You were saying that the Dubai subsidiary has done almost 350 crore of sales in this 9 months. To whom do they contract manufacture for? If you can talk about that.
See, we get the contract manufacturing done from Malaysia majorly and the Indonesia also. So there it is done in the bulk and shipment is done to various traders or what do you call them, the consolidators who take the goods and then they onward cater to the customers depending upon the region that they are catering to. So it is basically the kind of a contract manufacturing. We get the specifications from the consolidators or the description of the items that they want. Based on that, we develop the recipe and all those requirements to make the biscuits. So then this is the same is advised to the manufacturer. Then they carry out sample. They advise the sample to us. Then once the sample is approved by our team, then the entire the schedule of manufacturing is decided, and then they deliver as per the delivery schedule, and then we deliver it to our customers. So, and again, same, the credit of 30 to 35 days is given to the customers, and within that time we receive the payment, and then part of it is utilized to pay off the creditors also, the contract manufacturers specifically. And keeping a margin of...
I'll take over. We participate aggressively in the trade shows also. Currently also, we have participated in Gulf Expo, which is in Dubai. It is going on till 21st, and the response in that trade show is very, very good. So we are getting a lot of customers. We are getting a lot of inquiries from the exhibition.
Thank you. Mr. Gupta, we request you to rejoin the queue. We take the next question from Manikam Ramchandran, who's an individual investor. Please go ahead.
Good morning, sir. Am I audible?
Yeah, good. Yeah, you're audible.
Yeah, I just want to say, congrats for this very good set of numbers. Actually, you answered everything. I have nothing to ask. You have given a very good outlook as well as how the company is going to go on. You answered many of them, which I was thinking to ask. So no more questions from me. And thank you very much.
Your voice is not very clear.
Am I audible?
Yeah, but your voice is not clear. I'm not understanding what.
Okay, I have no questions. You have already answered the questions. Thank you very much.
Okay.
And congrats for the very good set of numbers. Thank you.
Thank you. The next question is from Dwanil Desai from Turtle Capital. Please go ahead.
Hi. Good morning, sir. So my first question is, in our financial results, we have given two segments. One is trading and another is manufacturing. So, my understanding is that whatever that we sell in India comes under manufacturing, while whatever that we supply from Dubai subsidiary, that is under trading. Is that a right understanding?
The manufacturing from the biscuit is coming under the manufacturing, and then the trading business comes under the integrated, wherein we are doing the kind of a contract manufacturing. So that is classified as a trading by the auditor in the results.
Okay, got it. So the contract manufacturing is the trading part of it.
Yeah.
Okay. And so, sir, you mentioned in the answer to earlier participant that, in the contract manufacturing, you kind of, get the orders from the customer and then get it manufactured and then kind of ship it to them. So I don't see any manufacturing setup in Dubai. So does it mean that we will get it manufactured from the other companies and then, supply it to the customer?
Yes, it is like that.
So it's more of a
contract manufacturing, because if we have our own manufacturing, then will be done from there only. Then there is no question of contract manufacturing. We get it manufactured through other players who have the manufacturing capacities in there.
Okay, got it. And so, sir, as you are saying that you are putting up a new plant, in Uttar Pradesh, which will come by FY'26 and FY'27. So that plant will actually manufacture, biscuits and bakery products.
Yeah. That will be, that is the manufacturing plant.
So that we will primarily use to expand our India business, or that will also, we will serve the export market to that?
Both.
And what? Okay. So whatever business that we are doing from Dubai, some of that can be transferred to this plant?
Yeah. Yes. That will be transferred also, and
same customers will be there. Yeah, same customers will be there, and that business or this business will be different. And this contribution of the new plant is going to add to the top line. And there is no transfer of the revenue from Dubai to Indian company. That company is independently doing it, and this company is with the new unit is going to manufacture the premium products.
Okay. And sir, if I see your raw material cost, that's almost 85 to 87%, while most of the FMCG companies, even in the biscuit side of it or bakery side of it, the raw material cost is around 60%, 55 to 60% kind of a number. Now, I understand that we do contract manufacturing, so that raw material cost, doesn't count. But in our own operations where we manufacture and sell, our gross margin should be upward of 40%. So can you elaborate, in our own manufacturing, what is the gross margin that we are making? So gross margin means final product prices minus raw material prices is what we mean by gross margin.
So our gross margins are approximately 20%, and you are saying that other biscuit manufacturing companies, the gross margins are 40%. I think that number needs to be rechecked because we are at par with the industry standards only. The gross margin is around 15 to 20% in the confectionery and biscuit manufacturing business.
Okay. And last question, sir. You said that, FY'26 we are going to grow at 50%, but the plant is going to come towards the end of FY'26, so probably revenue will start in FY'27. So where this growth is going to come from?
So the growth is coming from the domestic plant as well as the contract manufacturing. That is there also, because we want that by the time our capacities come into operation, we don't lose onto the market. So we will have a market ready, and whereas this the contract manufacturing which we are doing for the Indian plant, so that will be generating through the new plant in which we will have the capacities to manufacture. So that's how we are projecting the incremental revenues for 26 and 27.
Okay, got it. Thank you. That's it from my side. Wish you all the best.
Thank you. Next question is from Yogesh Sarore, who's an individual investor. Please go ahead.
Hello.
Yes, please. Go ahead.
Mr. Yogesh Sarore, you may go ahead with the question.
Yeah, can you hear me? Hello?
Yes,
Hello?
we can hear you.
Yeah, you can go ahead with the question. Thank you so much for the opportunity, sir. Congratulations on great set of numbers. Sir, wanted to confirm a few things. Earlier in the call, we said we have 25 to 75 split in domestic versus export. So 75% is coming from export. Is it good to say that?
No, so the subsidiary Nurturewell Foods Limited, there the domestic business is 75% and export business is 25%. And in Nurturewell LLC, it's 100% exports.
Oh, so if I look at these numbers which I have, so I'm just doing some back of the envelope calculations. So we have 526 crores up till now for this YTM. And in this, export have contributed to 131 crores. Is it okay to say?
Yeah.
No. See, you need to bifurcate to understand this figure. What Saurabh said is correct. See, there are two companies which are into exports. That is Nurturewell Foods Private Limited, our Indian company, and then the Dubai company. So Dubai company has exports of 20 to 20 crores, and rest exports are from the LLC.
Okay. So in this contract manufacturing that we get it done from Malaysia and other countries, so how are the pricing fluctuations handled over here? What are the risks? So do we see the risk of extending the contract from the customer? Do we also see the risk of price fluctuations on the raw material on the contract manufacturing in Malaysia? So how are we
under this? What we do, as soon as we get the order, let's say the order is under negotiation and the pricing is under the final stage, we book the corresponding raw material cost in terms of the flour or the palm oil and the other items. So that's why we try to keep the position open at least for 3 or 4 days max, so that we close on to the cost part as well as the revenue part, so that the open position doesn't go beyond 3 days, and we don't foresee any major fluctuation happening in the the raw material prices in 3 to 4 days. So that's how we are mitigating any fluctuation in the raw material prices later on, and then impacting the overall margins. So to keep the margins secure, we place the orders and freeze the raw material costing in such a way that the overall margin of 12 to 13% is maintained. Gross margin is 12 to 13% is maintained for the contract manufacturing.
Got it. So and the next question is on the 5,000 metric tons capacity that is coming in. So we said we are going to get it operationalized by the end of the FY'26. So roughly, if we start the manufacturing, so how much utilization can we do it on the FY'26 level? If we assume
See, what we are planning is that the COD, as far as we have planned to achieve the COD by October 2020, So that means we are trying to have at least 4 to 5 months of operations. Initial 2-3 months will be low, but yes, at least 3 to 4 months of operations with the new unit, and and considering the capacities that we are putting in and the market response that we have for the unit, that's why we are putting in it. And also, so we are expecting a close to 100 crore of revenue will be coming from the unit in FY'26, considering 4 to 5 months of at least 5 months of operation in FY'26. Because if you compare it with the existing factory, so once you are into premium segment, so the sales realization is much higher. It is almost like double than what we are doing in our existing setup. So once your revenue realization, in terms of per kg, you can say, that goes up, so turnover definitely goes up accordingly.
Thank you. Mr. Salode, we request you to rejoin the queue. The next question is from Abhishek Jain from Alpha Accurate. Please go ahead.
Thanks for the opportunity. Sir, how much the mix of the manufacturing versus outsourcing revenue?
Can you repeat your question? Yeah.
How is the mix for the manufacturing versus outsourcing revenue? So total revenue is around 526 crores. How much is the outsourcing revenue and how much is the on manufacturing revenue?
The overseas subsidiary revenue is entirely through the contract manufacturing that is there. And in terms of Indian company, the total revenue of let's say 9 months that we have, that is close to 90 crore, approximately 10 to 12% of the revenue will be from the contract manufacturing. Other is the in-house manufacturing for the Indian company.
So that means the 70% revenue comes from the outside of India, 350 crores, that is from the Dubai, and the rest from the your own manufacturing. So 70% revenue comes from there, right, sir?
Yeah.
And how much mix would be after this starting of this plant that will be start in FY'26? So because most of these will be used for your own sales in the India.
See, going forward, when the new setup will be operational, so let's put it for FY'27, let's say, because that will be the year when 12 months of full utilization of the new unit will be there. So we are expecting close to almost like 50% revenue will be coming from India and 50% revenue will be coming from overseas subsidiary.
And what is your target of revenue by FY'27 end?
27 and will be close to 1,200.
1,200, FY'27.
FY'27 consolidated revenue will be approximately 1,200.
And as that you are putting your own plant, that's why the margin is expected to improve from here.
Yes.
So
Yes. Even that because the new
margin we can expect, so EBITDA margin.
In terms of profitability, we are expecting our profits to go up by at least 30 to 40% because the new setup that we are catering or we are coming up, it has better margins or increased margins than our existing because these are premium segments only. So that is definitely going to add to the bottom line also.
So how much operating margin we can enjoy? Improvement in the operating margin?
See, operating margin will be close to 15 to 17%. That is going to be there.
But now the operating margin is just 9%.
So that isn't saying that because the new unit is going to add to the margins because that is a premium segment.
Okay. And how much CapEx would be required for these plants?
See, that is what we are working out. We will be able to give you a better picture in the next quarter. That is under consideration. The land has been acquired, so that is rather the agreement has been signed for the land. So based on the lines, number of lines, and the type of lines that we are considering, so then we can decide upon this thing. But yes, to give you an overall picture, we are considering a capex of close to 400 to 500 CR.
400 to 500 CR, and how this will be funded? Internal accruals?
That will be a mix of equity, debt, and internal accruals. That is under consideration. We'll let you know by the next quarter.
Oh, so that means that below the EBITDA level, there will be some finance cost, increasing the finance cost because of this.
Yeah, there will be some finance cost because but yes, the debt that we are considering, that will entail an outlay in terms of cost of interest also in the books.
Okay, sir. Thanks, sir. That's all from us.
Yeah.
Thank you. Before we take the next question, a request to participants to please limit your questions to 2 per participant. The next question is from Piyush Chedda, who's an individual investor. Please go ahead.
Hi, thank you for the opportunity. Just wanted to understand our domestic sales, which we do through distribution in North India. How are our products positioned? I mean, what kind of retailers stock our products? Is it small shops? Is it supermarkets? Are we in the organized trade? And how do we actually sell to the final consumer? I mean, what is it that gets the final person to buy our product as it's a relatively new one? Is it price? Is it retailer push? Can you help us understand this?
Yeah, sure. So this business is like totally a distribution businesses. So we have got our wholesalers, then we've got our super stockists, and then from the wholesalers, the good goes to the retailers. So this 150 distributors are the super stockists of the company, and from there we have our own sales teams. So through the sales teams, we tap all the wholesalers, and after the wholesalers, we've got a sales team for the wholesalers also. They tap the retailers. So our salesperson goes to shop, whether it be retail shop, whether it be modern trade, and they get the orders from there. They give the orders to the distributor, and then the distributor procures the goods from the super stockist. So this is the whole supply chain we work on.
And what is the incentive for the final retailer to stock our products? Is it better margins, lower price, better value for the consumer? What gets him to invest his capital in our products?
So the incentives is it is all about the reachability. So we have got extensive reachability. Number one, then it's the product range. Like for different type of geographies, there are different tastes, different kind of varieties. So second is that, and thirdly, the margins are definitely better in our product as compared to the big companies like Britannia, Parle, ITC. So that is what drives them.
And is the end product also priced a little better for the final consumer?
Pardon? Can you say that?
Product is it a little cheaper also than these big companies?
No, to the final consumer, the product price is the same. But what the other companies do is like if you talk about the grammage of the product, that varies from companies to companies. So, but the actual price to the final consumer, that remains the same.
So you always give a little more in terms of grammage.
Yeah.
And finally, I mean, how is this biscuit market? Is it a large unorganized segment in it, or is it largely organized sector that dominates it? With confectionery biscuits?
It is a mix of both. Mainly, it is organized only, and the unorganized market, it is not biscuits. It is more for the bakery products. You can say that is the more unorganized market. For biscuit, it is largely organized market.
The last question, why are you in this trading game? I mean, the trading game can't have margins more than 3-4%. So what is the incentive to get into that? Well, I mean, I'm sure it takes time, attention, and effort. So what is the thought process over there?
Can you ask again? I don't know.
The export trading business, usually these are very low value-added businesses. So what is the incentive for you to spend so much time and effort into this kind of business?
See, there are two things in this. One, you need to see that, in order to, cater to the customer base, or when you are expanding, or where you need to know the new customer you have to tap in. So then you start doing the trading also, so that, once the manufacturing substitutes the trading, so that you have the customer base ready. That is one part. Second is basically considering the order size. Sometimes, we arrange the material on the contract manufacturing or from the other manufacturers which have ready material. So we procure it and deliver to the customers. So these are the basic reasons why we get into this thing also. And sometimes, say we have got orders from some customers and they require biscuits as well as some other accessories or other some ancillary products also, that we arrange from the market and then we send it as a bundle to the customer. So that's why the trading supports the manufacturing as well.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Saurabh for closing comments.
I would like to thank everyone, all the stakeholders at Factor for the conference call. Thanks a lot.
Thank you very much. On behalf of Integrated Industries, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.